So good evening, everybody. As I said, thank you for joining us. We're going to be starting tonight's revision session by having a look at task 1 on the level 3 synoptic mock. Now, a big part of this synoptic is, of course, the 3 core elements that you've studied up until this point, which would be advanced bookkeeping, final accounts preparation, and then subsequently management accounting costings. But there's also an additional element that revolves primarily around ethics, but also a slither of just sort of legal requirements and how we have to act as A, professional members, and B, student members. Although you aren't full AAT members, you are technically still student members. You are expected to adhere to the AAT's guidelines and their fundamental principles and their codes of conduct, so to speak. So there are lots of questions around that. Now, in terms of how you will be challenging or dealing with these questions in your actual synoptic exam, a lot of it will be sort of maybe true or false, select the right option, what ethical principle is in breach, but it's also pretty likely that you're going to have to do one of these in a written question. So what would your response be? Now, again, over the next 3 revision sessions, as we're working through these mock assessments, we will be spending some time focusing on written work and the written skills. And again, just little things you can do to pick up those extra marks. But for tonight, as I said, we're going to make a start with task 1. So in this one, the little scenario that we're pitched is that Andrew has just started working at the accountants where you work, and he's asked you for just a few questions about ethics, really. And we've now essentially got a pick list of all of these different questions, and then equal to that, I've got a lot of responses, doesn't it? So let's just see what we've got in this pick list to start, shall we? We've got just lots of different things: imprisonment, negligence, National Crime Agency, a solicitor. Bit mishmash, isn't it? A lot of random words flying around. So it's not entirely impossible that you will get a question very similar to this. They are very keen on keeping you on your toes. It won't just be select one answer. They may ask you to pick out of a list. It's entirely possible that some of these may be the same answer twice. We just need to apply a relative amount of common sense when we're dealing with ones like this. Now, ethics is one of those areas that up until this point, again, you spent a lot of time on the core content. Ethics has only really been sprinkled in a little bit throughout those units. Unfortunately, we can't really steer around it at this point now. You're going to get lots of questions on this, particularly about money laundering, who you should report this to if you have a concern about something, who should you go to, how should you respond. If you aren't comfortable with those topics, it's important that, unfortunately, you take the bull by the horns and tackle them. You're going to be getting questions on it, okay? So first and foremost, we're saying that who should money laundering be reported to within a firm? So, of course, what we'd like to do is just pitch this out to the group, really. So, again, to give you guys a chance to get involved, to sit and listening to me waffle for 30 minutes, keep you busy, eh? So, let's have a look. We've got this list of different options here, and we're essentially saying, okay, within this pick list, who should money laundering be reported to within a firm? Now, it's important that with little questions like this, we start to pick out, just little pieces of information. So, for example, we're saying that if it's within a firm, okay, now, because there is a slight difference between the two, as some of you may or may not be aware. Now, I can see by the answers coming around the chat box that it's looking like we're saying it's the MLRO. That's, of course, stands for the Money Laundering Reporting Officer. I'm pleased to say we're off to a very good start. The MLRO, and I'm just going to write MLRO because I'll probably spend half an hour having to write all of that out. But yeah, we're absolutely right. If the company has an MLRO, that is who we should report these money laundering concerns to. If they don't, then we need to go to an external body, don't we? So when we're saying within a firm, it's essentially the internal control, isn't it? Do we have somebody in our department or at this place of work that does deal with such matters? But what if there isn't one? Again, in some very small companies, there isn't, is there? There's only 2 or 3 people that work there. Are they going to have a money laundering reporting officer? Incredibly unlikely. So in that situation, we need to look externally. We still need to report this somewhere, don't we? So for part B, saying which external body. Now, when we say external body, we simply mean an entity that is appropriate for us to report to, but is outside of just our internal company procedures. And again, I can see by the answers coming in, which is fantastic, saying that we're going to report that to the NCA. Now, if you aren't 100% of what that stands for. The NCA basically stands for the National Crime Agency. So this is the external body that we should be reporting this to. Okay, so let's just put NCA. Fantastic work, everybody. Super duper. Okay, let's keep going, shall we? Now, we're saying, what are the 2 courses of legal action a client can bring against their accountant? I do apologise, my screen just knocked itself off. There we go. Fantastic. So for the next question, we're saying we've got 2 courses of legal action that a client can bring against the accountant. Again, let's just pick out some keywords here. And again, this is just good repetition for you guys. When you're looking through this, it sounds pretty obvious. It's saying 2 courses, but again, let's just make sure we're abundantly aware of that. And then it's saying this is legal action, and it's bringing against the accountant. So again, just the individual or the recipient of this legal action, who are we actually saying is going to be told off, to put it politely. So I can see there's also answers coming in, which is fantastic. So just having a look, can't hear, just checking. Can everybody else still hear me okay? I don't know if that's just a one-off for Sunili. I will just check. Okay, that's fine. It might be an issue on your end, Sunili, if you can hear me. That's fine. Thank you for confirming, everybody. She might need to just double check her audio. Okay, so as we're going through this, I can see answers have been picked up very nicely. So let's just start with 2. Now, it is worth pointing out there's 2 correct answers. It doesn't matter what order you put them in, providing you've selected the right answers, you are going to get full marks. You don't need to put them in alphabetical order or the longest first or anything crazy like that. So in terms of what they can actually bring against them, the first one I can see in the chat box is negligence. Now, negligence, if you don't know what the term means, it basically means neglect. If you think of what that means, it's essentially not doing the job or not doing something properly. If you neglect to do something, it's essentially being ignored or just not done up to a standard that it needs to be. So one of those legal actions is in fact negligence. So let's write that in. And more specifically, if we're going to get very fancy, it's what we'd essentially call professional negligence, isn't it? Because in truth, again, you can neglect lots of things. We're talking about a professional sense here, aren't we? We as accountants, specifically as AAT members, we have a duty of care. If we neglect that, it's a form of professional negligence. And then the other answer I saw, which I think I'm going to say is right as well, was a breach of contract. So let me write that in as so. Now, again, what do we mean when we use the term breach of contract? What we're essentially saying there is, again, when some work has been done or planned to be done, there will be an agreement between 2 parties, aka the accountant and the subsequent client. A contract doesn't need to be a 5,000 worded document with all these little individual clauses. It can be something as simple as an agreement to perform a task. If that task isn't done by the accountant, they are breaching the terms that they agreed in the contract. And again, that essentially means that they're not doing what they should. Yes, Enid, the revision sessions for this week and the next 2 weeks will be sent out automatically to you. So providing you've registered, which of course you have because you're here tonight, check your email around this time tomorrow. You should get the link for the session. Okay, next one. State 2 potential actions that a court can take against an AAT member found guilty of fraud. So again, let's just pick out just key things. It's a bit obvious, but it's a good practice, as I said. 2 actions against an AAT member guilty of fraud, which again is us. Doesn't matter, as I said, if you're a professional member or a student member, we all still adhere to the AAT's Code of Ethics and their fundamental principles, which we will be discussing in detail over the next 3 revision sessions. Okay. So I'll pull the options up again. I don't like going up and down, up and down. It's just unfortunately the way these are laid out. I don't really have a choice, but I can see answers flying in again, which is fantastic. And it looks like there's a very popular 2, isn't there? We've got imprisonment and we've got fines. Now, you'll be pleased to know that both of those are correct. We're not talking about just perhaps a potential breach of contract or something like that here. This is why it's important that we start to pick out the key pieces of information in these questions. It's saying being found guilty of committing fraud. It's pretty serious, isn't it? Not great at all. So let's put these in. Of course, there can be a fine. Of course, there could be imprisonment, depending on the severity. There's a lot, what becomes a fine and what will result in imprisonment isn't something that we are going to debate in the exam, far from it, but these are the potential consequences that can come our way. And of course, we've got number one, and then for number two, let's put imprisonment. Fantastic. Okay, so we're making our way through this question pretty easily. Now, you do get ones like this in the exam. It's almost a little long-winded, isn't it, when you look at it, to be completely honest. Looks like there's a heck of a lot here, but as I said, you will get questions like this, and this is why it's important that you pick up all these little bits and bobs as you're working through, okay? Let's see where we are next. We're saying, what is the course of action a court can take against an AAT member who has been found liable for negligence? So again, let's do the same. Let's start to just pick out those key pieces of information. So we're saying this is another course of action from a court against a member, again, potentially us, being found liable for negligence. Now, again, the difference between negligence and fraud is pretty substantial. Neglecting work can sometimes simply just be not doing it up to an appropriate standard. Committing fraud is a different kettle of fish, so to speak. So let's just have a look at the options that we've got again. And based on all these ones, this is where, again, you just need to have, you don't need to be a lawyer or a solicitor or anything like that, but just a modest understanding. If something's going to court, why would it be going to court? What would the end result be? Fundamentally, based on these options here, it would be damages. Okay, so let's write that in. If somebody is hell-bent on taking us to court, they're probably not going to be doing it just so we send them an apology. There's going to be damages that we are potentially liable for. Now, what those are can be different things. The main one, arguably, would be for a monetary value, wouldn't it? So to essentially a form of compensation, so to speak. But there are alternatives as well. We might have to offer services to rectify the initial issue. So if we've been found to be negligent, we may have to pay out some compensation for just the hassle and the time. We may be ordered to actually facilitate and complete the work properly, essentially do the job that we neglected to do in the first place. Now, again, the finer points of how a judge comes to that decision isn't something that we are expected to discuss. It's just a generic example. Every case in this situation would, of course, be incredibly unique and incredibly different. So we can't say for certain what the correct action would be ahead of another. But again, these are the things that fall under the term damages. Okay, we're nearly there, I think. F. I told you this is a big question, isn't it? Let's have a look. So for F, now don't worry, I will scroll back up and bring up the Dropbox for the answers as well. I don't like the shooting up and down, but we will be doing it. So in this one, we're saying that a client asks their accountant to produce their accounts and then audit them. What safeguard should the accountant put in place if, and then we have a couple of different scenarios, they can reduce the self-review threat or they cannot reduce the threat. So let's, again, this is a bit of a longer winded question, isn't it? Let's just pick through this. So we're saying that we're being asked to produce accounts and then audit them. That essentially means that, we facilitate a service, we're going to produce the year-end accounts, but then we are also going to be doing the audit on them. Now, generally, for those of you that work in companies, you know that auditing will normally come from another source. It doesn't always have to, but it can be quite common. And when we say state what safeguard the accountant should put into place, what we mean by that is we're essentially saying, okay, there's a potential threat here, isn't there? Now, it's actually telling us in one of the questions that we need to answer. How can we reduce the self-review threat? So what we're saying here, and again, this is a threat that you will perhaps be familiar with at this stage. Think about what auditing is. It's essentially checking the robustness and the accuracy of information. If we have produced the information and then we are the ones also checking it for errors while the audit is taking place, it is a very clear self-review threat. There's a potential there that something could go awry or something unethical could unravel because we are essentially looking at our own work, aren't we? Or somebody in this department is also looking at the same department's work. So the idea we're asking here is, How do we get around that? Now, Anthony has just asked a very short and sweet question. He's absolutely right. Would you get somebody else to look at it? Yeah, so I'm going to go to the answers and we'll see if anything fits that bill, shall we? And as Rachel just put, Chinese walls. Great terminology, Rachel. Thank you. So based on this, now there's a lot of stuff on here that we essentially don't need. The two that I'm going to pick out and discuss, I'm going to look at separating teams. And then it was also saying, if I scroll back down very quickly, what if I can't reduce the threat? So I want to try and put something in place, but if I cannot do that and I cannot substantially reduce or altogether remove this risk, what do I need to do? I can see answers coming in again, which is fantastic. We've got separate teams and resign from the client. So let's put these in, and again, let's have a discussion about these, shall we? So number one, excuse me. My pen does do that sometimes. It has a mind of its own. Let's say separate teams. So when we say that, a couple of people have already actually put it in the chat box, which is great. Rachel used the expression Chinese walls, and Anthony said, would we get somebody else to look at it? Yes. Now, when we say somebody else, it depends on, again, just the overall size. If you have somebody sat on the desk next to you and you've both worked on this, getting him to look at it isn't really passing it on to somebody else. When we say separate teams, ideally we'd want an auditing department to look at this work, wouldn't we? If there is anybody in our department that has been involved in the production of these statements, it's not a separate party, are they? They might not have done as much as you did, but if they've still been involved in that work, there is still a self-review threat there. So this is essentially separation of duties or even roles. Now, in the second part of this question, we're saying, okay, what happens if actually we can't do that? If we've taken a look at this and they've said, okay, can you do my accounts and audit them? We've identified the problem. We've identified a self-review threat, but let's say that actually I can't do that. I don't have enough staff. I can't separate teams. Again, for some companies that are incredibly large, this might be bread and butter. It might be incredibly easy, but it's not a blanket solution, is it? There's no guarantees, unfortunately, that I will actually be able to do this if I don't have the staff. Now, in that instance, the bottom line is, unfortunately, if I cannot do the work in an ethical manner, the first thing I should be doing is resigning from the client. Now, you could argue, well, hang on a minute, why don't I just outsource it to somebody else? It's more of a patchwork solution, isn't it? If somebody's giving us the work to do to then give it over to somebody else, that can cause its own complications. In these situations, it would be easier for somebody else to pick it up. And again, this is just one of those. You could form a pretty decent argument for that, but in the eyes of the AAT, and in these scenarios, the AAT are very black and white. If it's not something that we can do in an ethical manner, then we're going to resign, okay? We're not going to do that work. Super duper. Now, G, crikey, we're halfway through the alphabet at this rate, aren't we? Let's see what we've got. If an accountant is worried that they may breach a fundamental principle, state 3 sources they are allowed to contact for advice. So again, let's pick out our key information. So we're saying if there's a potential that we may breach a fundamental principle. Now, if you aren't aware of what these principles are, you truthfully should be at this stage. It's like integrity, so on and so forth, professional behavior, all these different ones. Just have a read up if you're not 100% sure. You will see them popping up again throughout this mock. And we're saying, okay, I now need to find 3 sources they are allowed to contact for advice, because ultimately, even when we are qualified, when you finished your AAT studies and you've gone all the way to level 4 and you're an AAT member, it doesn't mean that you are infallible. There are situations you might find yourself in that are potentially, I won't say you're putting yourself in unethical situations, but there's a potential problem that you need to manage. Doesn't mean that, oh, well, I'm not a student anymore, so I don't get any help. There's lots in place. So let's just have a look up again at the options I've got in this pick list and see if any stand out more than others. Now, again, there's a few on here that I think make a little bit of sense. So as we're starting to filter through this, see if any sort of scream out immediately, shall we? Now, one that stands out to me would simply be helpline. You know, if we're after help, a helpline would be a good place to start. Now, it says an employer's helpline, a bit of a generic overlay. Now, what that might be, there might be an internal department within the company that can help. Again, it might be an external HR department. It might be anything of those ilks, but fundamentally, they all fall under helpline. Okay, the next one that screams out to me, as I can see people have also pointed out in the chat box, would be a solicitor. Now, again, depending on the nature of the issue, you know, am I going to ring a solicitor about a potential ethical breach or something I'm concerned of? Probably not. But if there is some trepidation about legal proceedings, again, if there's a contract that, you know, there's some terms in here that I'm not confident with, I'm not sure about, how might this affect me? I might want to seek legal advice from a trained professional. And then the final one, which I've seen people put in the chat box, so well done everybody, would be an appropriate professional body. Now, when we use that term, an appropriate professional body, it essentially means a membership. So the AAT are a professional body, the ACCA are a professional body. These extend far beyond just finance, but of course, these are the ones that we as accountants will be much more familiar with. The train doesn't stop, as I said, when you finished your AAT studies. There's still a heck of a lot that you guys will be doing. When you finish your level 4 studies, you become a full member, you have access to the AAT support. You know, ultimately you are a representative of them, of that professional body, because you are a professional member. It's a very good point, Anthony. So that support network is there. Now, of course, they have, for example, like the fundamental principles to guide you and stuff like that. But there's always also these extra resources in place. Okay, let's write these in, shall we? So we have the helpline. We also had, excuse me, a solicitor. I'm probably spelling that wrong, aren't I? That's poor English, do apologise. And then finally, professional body. Oh, excuse me. So professional body, now again, easy example will be the AAT. They are a professional body, okay? Yeah, that's right, Rachel. These sort of support will come in again when you are a qualified member. The sort of implications that we're talking about here would affect members more than students. So, for example, if you get your AAT QB, for example, and then you're a qualified bookkeeper in the eyes of the AAT, at that point, that would become more appropriate for you. It's for students, they won't really take sort of student questions on exams. It's more for actual like practice or bookkeeping scenarios that you're actually dealing with in the real work environment. Hopefully, you'll never have to use them. That's the bottom line. Hopefully you'll be, you know, your work will be quite smooth and you're not getting into these difficult situations. Okay, next one. It's saying that you discover your client has various errors in their tax affairs, fun, which they are now refusing to disclose to HMRC. What should the suitable course of action be? Okay, again, let's pick out that key information. So saying there's errors in the customer's tax affairs. They're refusing to disclose it. What do we need to do? How do we respond to that? So there's almost like a bit of a prelude coming on here, isn't there? There's a bit of additional information. Something's happened before we got to this point. We have found errors in the customer's tax affairs. Now, at this stage, there's nothing to say these are fraudulent errors. There is essentially lots of different things that can happen. People do make mistakes, which is the bottom line. You can absolutely make mistakes on work. We are all human. However, we have brought these errors to the attention of the customer and they are now refusing to disclose it to HMRC. So we've said, look, these errors need correcting. You need to essentially declare these. And he's saying, no, I don't think I will. Thanks. We're in a bit of a quandary, aren't we? How do we respond to it? So bottom line is, first things first, you're going to see this pop up a lot in your studies. The first thing we want to do is resign. Keep them at an arm's distance, okay? At this point, we are putting ourselves in a very uncomfortable situation. If there is, you know, could a customer make a legitimate mistake and then refuse to disclose it? Potentially. Again, every scenario is unique. It's difficult to say for certain. But at this point, it's concerning, isn't it? We don't really want to be working on these accounts anymore. So we will resign from the client in the first instance. Now, the next two questions do also tie into this. So if I've resigned, but before I do that, I'm concerned about what I've seen. So I'm saying that, okay, actually, I'm not happy with this. I need to report this to somebody. But what I actually do is I ring the customer up and I say to them, actually, I'm not happy with this and I'm going to report you. Sounds great, doesn't it? Oh, look at us. Ethical, strong stance. Gotta be careful though, haven't we? Because we might actually be committing a crime there. In terms of what that is, we can pick up off our list now. In this situation, whether we are ringing up to tell them that we are making a report legitimately or not, we are in trouble. It's essentially classed as tipping off. If there is a potential threat of unethical behavior, aka money laundering, for example, if I ring up and say, hey, I'm going to get you reported, we're essentially giving them time to try and cover the tracks, aren't we? Sounds very dramatic and a little bit extreme, but the principle applies. If we are going to report this and submit a report, don't tell them, because at that point, even if you're trying to do it with good intentions, you are tipping them off. You're letting them know, hey, I'm going to report you. And in that time, you know, if they're a bit creative with their account, so to speak, there's every possibility they can cover their tracks. We don't use it as a threat, but we also don't use it to give them a, hey, heads up, I'm sending you off to the NCA. Okay, so essentially, the class is tipping off. Now, it's important that we distinguish between the two avenues with this, okay? So what we're saying is, in the first bit, it can be a bit confusing because we say, well, hang on a minute, we've spoken to the client. When we look at task H here, we said that we found all these errors and they're refusing to correct them. Now, that is fine. So highlighting errors is absolutely okay. There's no problems with that. Because again, there's a potential possibility that they go, oh, that's a shocking mistake, and get it corrected immediately. The problem is, again, it's the informing of a report. So if we inform that we are going to make a report, so essentially we can call that informing, if my rubber works, excuse me, there we go. Oh, crack, I do apologise, my pen is not enjoying itself tonight. So if we say, as we've just said, I'm going to report you, that's when it becomes a problem. We can highlight issues to them and say, I found these errors in your books. We need to correct this. It's if they say no and you go, okay, well, I'm going to report you. That's what we don't do. We will resign from the client, keep them at an arm's length, submit the report without informing them, aka essentially without tipping them off. Okay, finally, we're nearly done, crack it. When reporting a suspicion of money laundering, what is the name of the document that is used? So let's pick out those key pieces. So suspicion of money laundering, the name of the document. So let's go back up. I don't like shooting up and down, but what we have to deal with. And let's see what we got. So looking through this, there's one that screams out to me that I can see in the chat box as well, which is an SAR, Suspicious Activity Report. The clue's in the name, isn't there? We've just said we suspect somebody of money laundering, so we need to now submit a report about said suspicious activity. So we'll submit an SAR. Now, you aren't actually going to submit one of these in an exam. You don't actually really see one, to be completely honest with you. what you will just do is say, okay, well, I need to submit a report. That's as far as we're really going at this stage. Now, again, hopefully you'll never have to submit one of these in your life, but actually completing the form isn't something that is really covered on the AAT syllabus. Knowledge of what to do is the key thing here. They aren't going to teach you how to fill in one of these specific reports, okay? Now, you'll be pleased to know that that incredibly long-winded question where we were halfway through the alphabet is now done. Happy days. Okay, so if you prefer to work with numbers, you'll be pleased to know that that's what we're going to be looking at in the next task. So as I have mentioned at the start of this session, the Synoptic is a lovely mix of ethics, but also key elements from the 3 core units. That's advanced bookkeeping, final accounts preparation, and management accounting costings. Specific things from those exams will come up, not everything. You are not expected to remember everything from all of those 3 units. Certain things will be coming up though. Now again, the examiner's report is a fantastic place to have a better understanding of what can come up in each task. So let's see what we're dealing with in this one, shall we? We're saying that, okay, we're now based in the workplace of AGN & Co, a firm of accountants where we work. We've been asked by our manager to help with the preparation for the year-end adjustments of a client. The year-end is March 16. Okay, so far so good. First things first, we've been asked by the manager to help with the preparation for the year-end adjustments, and we've identified a few items of inventory in the table below. Nicole, is there an updated Synoptic? At the moment, Nicole, no. They run it for 6 months and then they release a new report. We are expecting a new one soon, but it isn't out yet, I'm afraid. But the old one, like I said, when they changed the Synoptic, the key thing was spreadsheets got removed. A lot of this, aka like 95% of what was in the old Synoptic is in this one now. So that report is still very much relevant. Okay, so I'd still suggest do take a look at it. Okay, so we have a handful of different items in inventory. So we've got 3 different products, a load of different units, costs and NRV. And we say, what is the value of these items to be included in our inventory? Okay, so this is a little bit of advanced bookkeeping, isn't it, for those of you that have done it previously. If anybody can remember, we essentially now have 2 different things. How do we value this inventory? Do I value it at my cost, or do I value it at my net realizable value? So NRV, just to confirm, stands for net realizable value. Now, the rule that you will have learned in your previous studies is out of these 2, I want to select the lowest. So the lower of cost or NRV, okay? The lowest of the 2 is what I am interested in here. So with net realizable value, the examples that have been used previously is where we've perhaps had a product, but then we've had to incur extra costs to sell it. They like to use things like, okay, you might have had you printed a lot, or you've produced, I should say, a load of belts, and then all of a sudden you need to put them all back on their production line and drill a couple of extra, loopholes in there, for example. Just little things like that. So there's additional costs incurred before we can actually sell the product. Now, fortunately, we don't need to work that out in this question. It's just saying, okay, pick the lowest figures. So let's start with product A01. If my cost is 1125 and my NRV is 816, which out of those 2 figures am I going to select? So I've got 1125 for the cost and 816 for the NRV. Yeah, well done, everybody. We've just said, haven't we? We'll select the lower of the 2. So 816. Okay, let's just find all of them and then we'll come back to that. Same question for LZ01. The lower of cost and NRV is which one, please? 1450 or £28? Now, at this point, you're just picking the lower figure, aren't you? It's really not that bad, honestly. It's the cost. Thank you, everybody. Finally, BA24. What do we think? What's lower, the cost or the NRV? Yep. 284, spot on. Okay, so we can now work out what we're valuing our inventory at. So I do need to take into account the actual number of units for each product. But fortunately, I'm simply going to do the number of units times by the figures I've just highlighted. So times by the cost or times by the NRV. So 14,000 times £8.16 gives me a figure of £114,240. And we'll just do the same again, because of course we need the total value. Again, this is where it's important that we check what the question is asking for. So we need to take into account everything here. LZ or 1, we've just said £14.50. I've got 8,725 units in stock. So a simple multiplication, that's going to give me 126,512. Fantastic. We are pretty much there already, aren't we? We're not doing too bad so far. I'm running out of space. There we go. Happy days. Last one, BA24. I have 3,650 units of this in stock. I've already identified that I'm going to value this at the NRV of £2.84. Give me a figure, £10,366. So all I need to do now is just mash all of those figures together. So the 114,000, add 126, add the 10. Claire's asking, do we round up or down? Now, in this question, it's not actually asking us to round. You will, of course, note that we do have on that 126,000, there's 50 pence in there as well. The question isn't saying round up or down, so I'm going to include that in my figures, okay? So adding all of these together gives me a total, 251,118 pounds and 50 pence. Be wary of rounding. It isn't saying round up or down to the nearest pound. It's just saying what's the value of inventory. There's nothing here I need to round up or down, is there? I'm not working to 4 decimal places or anything crazy like that. It's just 50 pence. So I'm going to include that in the value, okay? Super. Next one, bit of depreciation coming up, prior warning. So what we got here, we're saying that, okay, carrying on this little scenario that we now find ourselves in, the machine was purchased for £15,000 during the year. Now, again, you'll notice I'm going to start taking and highlighting key information as we're going through. And this is the sort of thing that you should be doing in your practice as well. As you're going through these questions, pick out that key information. Transportation costs were £1,500. Installation costs, £750. We're saying that the machine broke down at the end of its first month. Not very reliable by the sounds of it. So we had a breakdown and it cost us £400 to repair it. The client depreciates machinery at 10% each year on cost, assuming no residual value. Okay. And we're also told they charge a full year's depreciation in the year of purchase, may be called the year of acquisition in your exam, but acquisition is another way of purchasing. So it's just the same thing. Don't let it throw you off. Okay, now let's work this out. So there's a few things we need to pick through. This is very characteristic of the sort of thing that you are likely to come up against, because what they want you to do sometimes is they want you to dance around the point. You need to find some figures before you can work out the rest. In this one, I need to work out the net book value, as the question is asking me. So to work out the net book value, I need to identify the depreciation charge for this asset. To work out the depreciation charge for this asset, I first need to work out, okay, what is the amount I'm actually depreciating? We have to go quite a way back here. Look at what it's saying. I've purchased the machine for 15,000. Transport costs, installation costs, and then a maintenance repair cost. So there's two very distinct types of expenditure. We should hopefully be familiar with these at this point. I'm not going to say it yet. I'm going to give you guys a chance to put it in the chat box. There's something expenditure and something else expenditure. And those essentially dictate how we need to deal with this. Because when we look at essentially the purchase of a non-current asset, there are certain costs that we can also include in that value. And as Megan has just put, well done, Megan, capital and revenue expenditure. When we have capital expenditure, we're essentially going to include it in the amount that we depreciate. Revenue expenditure, we don't. How we differentiate between the two, as a general rule of thumb, capital expenditure includes the cost of the asset and any and all costs incurred getting it to you and getting it running, or for more than a year, as Rachel has put. So if there are delivery fees, installation fees, additional components that I need for the machine to work, I can capitalize all these, and then that will essentially get added to my original purchase figure. Revenue expenditure is things that essentially run year on year. Maintenance fees, insurance, so on and so forth. Servicing, all of these are, we can't capitalize those figures. It's revenue expenditure, okay? So with that in mind, I now need to pick out what I'm going to include. I've got the purchase price of 15,000. I'm absolutely going to include that. Okay, what about the transport costs of £1,500? So based on what I've just said, do you think I should capitalise that? Should I include that in my figures? Yeah, because I've just said costs incurred getting the asset to us and getting it in full working order. We need it delivering, don't we? So we can include that 1,500. Installation costs. Same question, guys. What do we think about that? Am I going to include installation costs here? Yeah, again, getting it to me and getting it running. If it's not installed, it's not running, is it? And then finally, maintenance fees of £400. Am I going to include those? Of course I'm not, because I've just said out that's revenue expenditure. It's broken down, but it's not capitalized figures. So that essentially comes, quite short and sweet, to 17,250. So we've worked out the first part. We've worked out, okay, how much we need to depreciate. Now I actually need to perform the depreciation calculation, don't I? Now, on this one, it's pretty straightforward. It's just saying it's charged at 10% on cost. We've just worked out that 17,250. So all I need to do is £17,250 times by 10%, which gives me a figure, as Bradley's put in the chat box. Thank you, Bradley. 1,700. And is it 15 or 25? 25, excuse me. It's my poor writing. So the depreciation charge for the year would be £1,725. Okay, we're nearly there. So the net book value, what do we mean when we use that term? We're essentially saying the net book value is the cost less our accumulated depreciation. Now, at this stage, the accumulated depreciation is just the one charge. That will change as years progress. But at this stage, it isn't. It is still accumulated, but I've only accumulated for a single year. So I simply need to do 17,250 less my depreciation, giving me an answer of 15,525. So again, our cost less accumulated depreciation. Now, at this stage, as I just really want to reiterate the point, there's only one charge at this point, isn't there? In the next year, if I do another 10%, of course, that figure is going to increase. The accumulated depreciation figure goes up, which means our net book value subsequently goes down. Okay, fantastic. Doing pretty well so far. So based on where we are now, we are unfortunately out of time. So I'm just going to hit the stop record button.